Now, for more on the Federal Reserve's action today and its effects on the market, let's turn to our guest. We have Howard Davidowitz. He's the chairman of Davidowitz Associates. Davidowitz Associates provides consulting and investment banking services to the retail industry, an expert in restructurings. And also we have Jim Bianco. He's the president of Bianco Research. He focuses on the connection between economic events and financial markets. Gentlemen, welcome. First to you, Jim Bianco. What do you make of the Federal Reserve's report that interest rates, at least relatively, are going to stay low until 2013? Takes them out of the election cycle, doesn't it?
Yeah, it takes them out of the election cycle. It also had the intended effect that they wanted. Interest rates, Treasury yields, all the way out to 10 years made a new all-time low today. They even exceeded the panic lows that we had in 2008. The hope is that by driving interest rates that low, they're going to force investors to take more risk, force them into equities, force them into corporate bonds. Let's call it what it is, Pimm. They're trying to manipulate interest rates and trying to manipulate the stock market higher in hopes that it's going to support the economy. They tried that with QE2. It didn't really work. We'll see if this version of it's going to work.
Howard Davidowitz, do you think that this version of quantitative easing, as Jim Bianco describes it, you think it's going to work?
Oh, it has no chance. I mean, basically what these imbeciles have done is taken the corporation of the United States, filled our balance sheets up with the biggest pile of crap you've ever seen. Fannie Mae, Freddie Mac, they bought every piece of junk imaginable, guaranteed it all. Now they bought all this paper, Treasury bills, all of our debt. And if interest rates ever go up, our whole balance sheet will sink. In other words, they've risked more and more. They've made it shorter and shorter term. What normal corporation would ever do this? In a period of low rates, shorten the term? All of this, to me, is done by college professors who've never had a job, who can never get a job, who've never generated a job, and know nothing.
Jim Bianco, what do you make of this assessment? Is it possible that the Federal Reserve will just continue to either buy these kinds of assets or print more money? If nothing happens, then what? Look out below?
Yeah, well, look out below. And not only that, but feeding off what Howard said, take the other side of that. Let's assume someday that the American economy recovers and that we're not going to go the way of the Roman Empire. And I think it will recover someday. When they go to unwind all of this, we're going to annihilate the Treasury market. We're going to have interest rates soar, and that's going to cause a whole set of problems for itself right there. So what they're trying to do is they're trying to look forward over the short term and trying to do whatever they did for the short term. You know, if they had the FOMC meeting on Friday, they would have never done this. They did this in response to the down 600 yesterday. And they seem to be going from one market move to another market move with Fed policy, and I think it's a bad way to do it.
Howard Davidowitz, what about the notion that the Federal Reserve, by doing this, is trying to stimulate the economy? Now, we know that the $787 billion stimulus package that was passed by Congress, that seems to have gotten stuck somewhere. Many people say that that's actually on the Fed's balance sheet because they bought up all the paper.
Well, there's no question about it, and that's the stimulus where Obama has announced the shovels were lost. Shovel-ready projects. He went all across the United States, and he was on TV laughing like a hyena that there were no shovels. So that's so far $1 trillion with interest out the window and in the toilet. Now we have another committee that's going to study everything. Now, he had a budget committee that he took and printed it on a roll of toilet paper. Now we have another committee. Here's what a normal president would do. We're in a crisis. He would call back to Congress. He would give them 5 days to come up with $10 trillion. I think it would be so easy to do because the last cut, we cut zero. The cuts start after 2017, 70% of the cuts. We have no cuts. We've done nothing. We're doing nothing to fix ourselves. We got all this fake manipulation stuff moving around. It's all bad. We're not facing the problems. You know, when growth is slower, could you imagine what our deficit is? Obama has this crackpot projection of 4% growth. Our deficit is going to be $2.5 trillion. What is he talking about?
Jim Bianco, 4% growth coming from the president. What happens if they have to revise that estimate?
Oh, they're going to have to revise that estimate. Just a quick economic forecast this year have been about as bad as they've ever been. They've been completely off. And I would just add to what Howard said, that S&P gets it. They cut the rating of the U.S. to AA+. If you read what Moody's and Fitch said, I think they're saying that they're going to cut after this committee comes together with the $1.5 trillion, and that's not going to be enough. So the marketplace is starting to get it. We know that not enough was done with the budget deal. That's why we lost our credit rating on Friday.
So, Jim Bianco, what? Sell the rallies as they occur?
Yeah, the economy was growing at 0.3 and 1.3 when everybody thought that everything was great, when QE2 was pushing stocks higher. Now, all of that is reversing right now. I'd put the odds of a recession at better than 50% right now, and I think that any strength you get in this economy, you are in the stock market, you'd want to sell because you're going into a very difficult period.
All right, Jim Bianco, so why did stocks rally today? Can't everybody read that statement and see about the weakness in the U.S. economy?
You got to back up and remember what stocks were doing in the week before. They were down 600 points yesterday. They've been down 1,000 points in the last few days. They were down 200 points right after the meeting. They were so oversold and so manic to begin with that any new information was bound to pull the market up and down. So they rallied 400 points in the last hour. Remember, we're still down 250 points in the week. So it's not like we're having a great week.
Howard Davidowitz, there's news that Senator Harry Reid is appointing Senators Murray, Baucus, and Kerry to the deficit reduction panel that is supposed to come up with a plan about 2 days before Congress leaves for the Thanksgiving recess. That's the time frame. Is there anything that they can accomplish that is going to change the dynamic between what the government does and how investors would then react?
Here's how a manager would look at it, a businessman who invests.
Now, you've done a lot of restructurings, right? I mean, you've restructured.
We've done maybe 200, 300 companies.
Okay.
The first thing you do, you go to when I sit with the banks, my projection is always so conservative, it can't be challenged. Because they ask me, well, it was store sales, and I said, nothing's going to improve. I say, everything is worse. And then I demonstrate how we can be profitable in that circumstance and pay them down. That's how you approach a restructuring. Anybody, not me, anybody who's sane. Now, you got to show leadership. This committee can do zero. Do you know how many we just finished the Simpson-Bowles committee? By the way, they were very intense. We have to cut $10 trillion. We got to wipe out all the tax cuts. That's $4 trillion, the Bush tax for everybody. You can't only do it for the rich. It's only $900 billion. $4 trillion.
All right, so you get the tax cuts, they go.
Gone, and then there's another $6 trillion in Medicare, Medicaid, without a lot of effort. With small changes, means testing, you get another 6, you're at 10 trillion. We've got to get to 16 trillion. That doesn't even include the military and all sorts of things we could do. Freeze. Obama's gone mad. He's hiring tens of thousands of people. We got to put a freeze on the madman spending. He can't hire anybody. So if you take all those steps, you're going to get to the 16 billion easy. It's not a lot of effort. It won't disturb everybody's life. We're going to have to get to 60. We're going to have to get serious. If Jack Welch was the co-president, don't you think this would have happened a long time ago? Any sane businessman would do this because it has to be done.
Well, Jim Bianco, do you think any of this is possible? Can we deal with this kind of pain and then get through it? Would we then see the economy grow?
Oh, it's going to be very difficult. The old line that you get the government that you deserve. Howard, I agree with you, but we don't have 535 businessmen. We have 535 politicians. So there's all very limited things that they can do. And basically what they can do is not enough. And that's why we lost our AAA rating.
Exactly.
All right. Well, Jim Bianco, having said that, turn your attention now to companies. Companies and corporate treasurers, for example, they might be looking pretty smart right now because they've kept a lot of cash on the sidelines for just these particular types of events. Are companies worth investing in?
Companies might be worth investing in at this point. Whether or not the stock market is worth investing in, because let's not confuse companies with the stock market. They sometimes can be two different things. I think the stock market's still going to go through this manic depressive phase. It is still driven by computer trading. It is still driven by a lot of macro events, and the macro events are pointing towards recession. And the stock market is going to have a hard time moving forward from here. I don't necessarily think it's going to go down a lot more than it already has. but it's going to be very volatile, and it's probably going to continue to move sideways to slightly lower.
Jim Bianco, just a follow-up on what happened with S&P and the rating of the U.S. government's long-term debt. You've written that it really makes no sense to have sovereign debt ratings that are below the corporate ratings of a particular country. Is that right?
Yeah, they used to use a thing called the sovereign ceiling. Whatever the rating was of the government, no corporation could be above that. Well, they've kind of suspended that, and they've allowed J&J and Microsoft and ADP to continue to have AAA ratings, and that's good. But what they have said is anybody that deals with the government or anybody like an insurance company that has treasuries as their capital, they can no longer be AAA. And that's why you're seeing thousands of municipals that use treasuries for defeasance programs and the like, all getting downgraded as well, too. So there's no munis that are going to be AAA, and there's no mortgage-backed securities that are going to be AAA as we move forward from here.
Howard Davidowitz, this thought that nothing is going to be AAA because you've got this almost ceiling on sovereign debt, as Jim Bianco describes. Is that going to affect, let's say, the cost of doing corporate restructurings, the cost of capital? I
think eventually the answer is yes, but the problem here is this business of GDP going down to consumer. If you look at how we got to here, the top 10% of Americans, who account for 40% of the spending, who are invested in they made a fortune. They drove spending. If capital markets ever come down, sign up for a double dip. We're there.
Howard Davidowitz is still with us of Davidowitz Associates, an expert when it comes to corporate restructurings. I want to bring in now Meir Statman. He is a professor of finance at Santa Clara University. Professor Statman studies behavioral finance. He tries to find out what drives investors to do the things they do. Meir Statman, good to have you with us on Bloomberg. So give us your impression of what has gone on over the last 72 hours. What kind of mood are investors in, and how did we get here?
Well, investors are afraid, and for good reason. The economy is in the tank. 9% of us are unemployed. It looks like the recession is coming back. So it all became crystallized, I suppose, with the rating by Standard & Poor's. It did not really provide new information, but it really told people what we already knew, that Washington is in a mess and the country is in a mess.
Meir Statman, you say that we've got to remember the Serenity Prayer right now. What is it, and why do we have to remember it?
Well, the Serenity Prayer says that we should change what we can change, and we should learn to live with what we cannot change, and that we should be able to tell the difference. It is important because I hear all the prescriptions about what Obama should do and shouldn't do. Quite frankly, Obama does not listen to me, and it does not listen to the other guests on your program. What we can take care of are the small things, our own saving, our own investments, our own family, our own goals in life. And if we do that, then we make the best of a very bad situation.
Howard Davidowitz, so how would you mix the Serenity Prayer with your experience in restructuring and this idea that you need to take the deep pain early on? Don't wait for it to get worse.
Pain is the only answer, but I like the Serenity Prayer because our living standards in this country can never and will never be the same. We've destroyed ourselves. But we have to accept that. And we have to get ready for more pain. And we have to accept it, deal with it, work with it. It'll take us 10 years to work this through. And if we accept it and are ready to face it, I'm very optimistic. I believe in America. I believe in our people. And I think they are ready if we can get a sane leader who can lay out a plan. We haven't had a budget in 830 days, and we're in the biggest financial crisis in our history.
Meir Statman, what about this idea of taking the pain up front, the notion that you don't wait for things to get worse, you do the big cuts at the very beginning when maybe you have more flexibility?
Well, that would be nice if it were a family or if it were a corporation. But a government is not a corporation, and a government is not a family. There are Congress people, and they take care of their constituents. And then their constituents say, don't cut my Medicare. And so it is a very difficult thing to do. We will have to do it the way it's done in politics, not the way it's done in business. And it is going to be in fits and starts. I don't like what's going on in Washington any more than anyone. I don't think that people in Washington like it, but that really is the political process.
Meir, when you talk about investments, talk about the notion that fear heightens the perception of risk and how that can feed on itself in terms of making decisions.
Well, we know that from both experience and from clever experiments that if you make people fearful, they become more risk averse in small things and large. And here, that fear is real. That is, when we look at our accounts, when we think about how much we have for retirement and for our families, we shudder. And so it is natural for us to be fearful, but fearful makes us risk averse, too risk averse. And so some people decide to get out of stocks altogether, the hell with diversification. Some people do rash things. And so it is really very, very important to recognize your emotions and stand a bit aside so that you observe yourself and behave more logically than your emotions command you.
Howard Davidowitz, fear driving people's decision-making process when it comes to stocks. You've mentioned previously that there are some companies, some corporations, they're doing very well. They've set aside cash. They're prepared. Profits are growing.
Corporate America's in great shape. We've talked about sovereign countries, and a professor has said, well, the government is not a country, so let's look at some governments. Let's start with Japan. Nikkei was 39,000. It's only down 75% for a very long time. They've handled the pain. Let's look at Canada. They've downsized their government magnificently, but they didn't have Obama.
We've got to leave it here. Howard Davidowitz, Meir Statman, thanks very much.